Kiplinger says these are 11 costly Medicare mistakes you should avoid making. Did they miss any? Kiplinger, the publisher of business forecasts and personal financial advice, is known for and has a very long track record of providing unbiased, factual reporting. They state that, quote, our readers are intelligent and action-oriented, and they tend to trust our advertisers as much as they trust our advice, unquote. And, quote, we treat every subject with balance and fairness, giving both sides of the issue and doing our best to check stories for accuracy. We are never out to get anyone, promote a cause, or boost anyone's commercial or political interest. We simply seek to give our readers useful, factual information coupled with our own best judgment, unquote. So in this video, I'm going to go through their list of 11 costly Medicare mistakes and let you know how they did. Hi, I'm Chris Bryan, the Medicare analyst, licensed agent in 14 states, and I am based out of Charlottesville, Virginia. Maximizing your Medicare should be very important to you. My goal is to help people like you make a wise and confident decision about all of your Medicare choices so that you can protect your income, your assets, your savings, and your health. If today is your birthday, then a very happy birthday to you. Booth Tarkington said, cherish all your happy moments. They make a fine cushion for old age. Kiplinger states, quote, if you don't make the right choices, you could end up with high Medicare premiums and big out-of-pocket costs, unquote. And I could not agree more. So here we go. Number one, keeping your Medicare Part D plan on autopilot. Their point, if you've been prescribed new medications or your drugs have gone generic over the past year, a different plan may now be a better deal for you. That is correct. I cannot tell you how many people just autopilot their Part D coverage. Big mistake. You could have the lowest overall drug cost plan for this year, and next year it could be the highest. I've seen some of my clients save $3,000 to $4,000 by switching their Part D drug plan. Now going forward, this might not matter as much with the new Part D rules, but here's the deal. You need to definitely check your drug coverage each year in the event that your premium goes up significantly, you are on brand name or generic medications that are tier 3 or higher, your medications have changed, you've added, you've gotten rid of, you've gone from brand to generic. Number two, buying the same Medicare Part D plan as your spouse. Their point? There are no spousal discounts for Medicare Part D prescription drug plans, and most spouses don't take the same medication. One plan may have much better coverage for your drugs, while another may be better for your spouse's needs. That is correct. I get it. You may find it easier for paying premiums if you and your spouse have the same plan. But as I tell people, when it comes to Medicare and your health, you are very distinct from your spouse. Just because your spouse got a certain Part D plan or even a Medicare supplement or Medicare Advantage plan doesn't mean that you should. Number three, going out of network in your Medicare Advantage plan. Their point, you usually need to use the plan's network of providers and hospitals to get the lowest co-payments, and some plans won't cover out-of-network providers at all except in emergency. As with any PPO or HMO, it's important to make sure your doctors, hospitals, and other providers are covered in your plan from year to year. More or less, let me explain. If you have an HMO, unless it's an emergency or urgent care situation, with most plans, you have to use the provider's network. If you have a PPO, then there is a network, but you can also go out of network. If you have a PPO that is what is called passive, that means you can go out of network and have the same copay as you would at an in-network provider. These PPOs offer max provider flexibility and are great for people that travel, need out-of-network specialists, or perhaps a specialty hospital. But you still need to make sure the provider will accept the plan. Most PPOs, however, may cost you more if you go out-of-network by either adding a deductible or higher copays or coinsurance. Ironically, sometimes going out-of-network with a high coinsurance will actually save you money. Just one example. Many PPOs have a $300 plus or minus copayment for an MRI or CAT scan. However, if you go out of network, even with a 40% coinsurance, your MRI or CT scan will cost you less. And that is because the insurance company still knocks off a lot of what the provider charges. One of my Medicare Advantage clients got an MRI at UVA. Her copayment on the plan was $300, meaning the insurance only pays the balance owed over $300. UVA charged her $6,516 for the MRI. Humana got $6,374 knocked off, meaning the allowable amount for the MRI was only $142, which is less than the copayment. So $142 is better than $300, but Humana paid nothing. If it was out of network, then she would have owed 40% of the $142 or $56.80. So the point is, sometimes going out of network is actually less than in network, but it's not always easy determining ahead of time which way is cheaper. And yes, you do need to make sure your providers are covered in your plan from year to year. The problem is you can pick a plan with all of your providers in the network, and then in the middle of the year, providers can leave the network, and then you have an issue. I have a real beef with this. I respect the right of providers to be able to choose which networks they want to be a part of. But when the plans are annual plans and you are, in most cases, locked in for the entire year, then I think providers should be obligated to stay in the plans networks throughout the calendar year. Number 4, not switching Medicare Advantage plans mid-year if needed. Their point, outside of your annual election period from October 15th to December 7th, you may have a couple other opportunities to switch your plan if need be. They specifically mention the Medicare Advantage open enrollment period from January 1st to March 31st. During this period, you can switch your Medicare Advantage plan if you don't like the one you recently signed up for, or you forgot to make a change during the annual election period. Or you can drop out of your MA plan and go back to original Medicare, get a Part D plan, and maybe a Medicare supplement. If you have a 5-star Medicare Advantage plan in your area, then you can enroll into one of those year-round. But let me warn you, just because it's 5 stars doesn't mean it's worth getting. I've seen 5-star plans in areas where the main hospital and provider groups are not in the plans network. Doesn't matter how many stars it has if you can't use it, or the benefits or drug coverage are not as good as a 3 to 4-star plan. There are also special enrollment periods where you can make a change. If you move out of your plan service area or into an area that has other plans, then you can make a change. If you move into a long-term care facility, then you can make a change. If you qualify for Medicaid or Social Security extra help, you can make a change now on a quarterly basis, and starting 2025, you can do it on a monthly basis. If there happens to be a declared disaster and you had a valid election period during that time, then you can make a change. The last 2 situations are the ones that the telemarketers love. They love to call people on Medicaid and extra help or in areas of declared disasters to get them to switch. Number 5, not picking the right Medigap plan. Their point, if you buy a Medicare supplement plan within 6 months of enrolling in Medicare Part B, you can get any plan in your area even if you have pre-existing medical conditions. But if you try to switch plans after that, insurers in most states can reject you or charge more because of your health. It's important to pick your plan carefully. Amen to that. It is critical, especially when turning 65 or first getting Medicare Part B, that you pick the plan that you believe will be the best for you based upon your unique healthcare needs, philosophies, and budget. In most states, you only have 6 months after turning 65 or getting Part B to get a Medicare supplement guaranteed. As Kiplinger mentions, there are some states that offer a perpetual guaranteed issue right for Medicare beneficiaries, as in New York. Consequently, those states typically have much higher premiums. A Medicare Advantage plan could be very appealing when you are turning 65 and in relatively good health, and could save you thousands in premium dollars and give you extra benefits. But what will that plan be like next year, let alone 10 to 20 years from now? It's easy to go from a Medicare supplement to Medicare Advantage because you can't be denied coverage on Medicare Advantage plans. Whereas if you have a Medicare Advantage plan and you want a Medicare supplement 5 to 10 years from now, you may not be able to get one. I should point out that in my experience with the hundreds of clients I have on Medicare Advantage plans, the vast majority are very satisfied with their plan. And I think the majority of people that have Medicare Advantage plans are happy overall with the plan. But they are certainly not right for everyone, and some people have had some very serious issues with their plan. So you need to think long-term when choosing a Medicare plan. What plan would you want 10 to 20 years from now if you have a serious health issue? Number 6, forgetting that you can sign up for Medicare at 65. Their point, if you're already receiving Social Security benefits, you'll automatically be enrolled in Medicare Part A and Part B when you turn 65. Although you can turn down Part B coverage and sign up for it later. But if you aren't receiving Social Security benefits, you'll need to take action to sign up for Medicare. And they point out that if you work for an employer with fewer than 20 employees, you must sign up for Part A and usually need to sign up for Part B, which will become your primary insurance. Ask your employer whether you can delay signing up for Part B. Bingo again. You want to sign up for Medicare, especially making sure you get Part B when you are first eligible and need health care coverage. You can delay Part B if you are still working and have credible group and/or retiree health coverage. Missing your Part B enrollment will cost you a 10% penalty for each year that you delay. Plus, without Part B, you won't be able to get a Medicare supplement or a Medicare Advantage plan. One thing they missed was delaying Part D drug coverage. You are eligible for Part D once you have Part A. So you may think that if you don't sign up for Part B, then you don't need Part D, or there are no consequences for not signing up. Well, think again. If you have Part A and don't have credible drug coverage through a group or retiree health plan, then you'll be penalized for every month you delay coverage. Number 7, not signing up for Medicare Part B if you have retiree or COBRA coverage. Their point, other employer-related coverage such as retiree coverage, COBRA coverage, or severance benefits isn't considered to be primary coverage after you turn 65. More or less correct. Some retiree health plans may pay first and be considered credible, and you may not need Part B. But if something happens with the retiree coverage, like they stop giving it to you, then you may be able to enroll in Part B without a penalty. This can be very nuanced, so be careful. In most cases, retiree coverage is secondary and you need Part B. If you delay, that means you could incur the 10% late enrollment penalty for Part B, and you may have to wait if you miss your window for enrolling either at 65 or within 8 months of leaving your job. They do state if you miss the window for enrolling when you turn 65 or 8 months after you leave your job, you can only sign up for Medicare between January and March each year, with coverage starting on July 1st. That is no longer true. You still have to wait till January to March to sign up during the general enrollment period, but instead of them waiting till July for your Medicare to start, it will start the very next month. By the way, there is a bill in Congress this year addressing the issue with COBRA coverage and Medicare, something to pay attention to. Number 8, forgetting about the Medicare Part B enrollment deadline and leaving your job. Already mentioned above, their point, don't miss the 8-month window after leaving your job to get Part B. That is correct. Again, they do, however, mistakenly state that once you do sign up during the general enrollment period, your coverage won't start till July 1st. See the link in the description for more information. You can sign up for Part B anytime you're still covered by the group health plan. Number 9, making financial moves that increase your Medicare premium. Their point, there is a thing called IRMAA, the Income-Related Monthly Adjustment Amount. If your income is over the limit, then you will pay an additional premium for both Part B and Part D, and will do so until your income is below the threshold. They also state that if you're near the income cutoff, be careful about financial moves that could increase your adjusted gross income and make you subject to the surcharge, such as rolling over a traditional IRA to a Roth or making big withdrawals from tax-deferred retirement accounts. To stay below the limits, you may want to spread your Roth conversions over several years or withdraw money from a Roth IRA rather than just from tax-deferred accounts. And they are bang on for this, and this happens a lot. Social Security goes by your tax return from 2 years ago, so you need to be thinking about this at least 2 years prior to turning 65 or getting your Part B. Other situations that can cause you to get hit with IRMAA are selling a house and having capital gains, so check with your CPA. Getting a divorce and having a settlement that pushes you over the limit. Withdrawing money from certain investments to pay for a college education. Hitting the lottery, but you wouldn't care in that case. Number 10, not contesting the high income surcharge for the year you retire. Their point, relating to what was just mentioned about IRMAA, is that you may be able to get the surcharge reduced on appeal if your income has dropped since then because of certain life-changing events such as a marriage, divorce, death of a spouse, retirement, or a reduction in work hours. In that case, you can ask Social Security to use your most recent income instead. You'll need to provide evidence of the life-changing event, such as a signed statement from your employer that you are retired. This is a good point, and it is often overlooked. See the link in the description to learn about appealing IRMAA. And number 11, signing up for Medicare Part A if you want to contribute to an HSA. Their point, if you have an HSA, you have to stop making contributions prior to your Part A starting, whether that's at 65 or later. And bingo on this one as well. However, they didn't mention the potential penalty for making HSA contributions after the cutoff. If you go on Part A at 65, then you can avoid a tax penalty by making your last HSA contribution the month before you turn 65. This holds true if you sign up less than 6 months after you turn 65. However, if you sign up for Medicare 6 or more months after turning 65, you can avoid a tax penalty by stopping HSA contributions 6 months before the month you apply for Medicare. So how did Kiplinger do with their list of 11 costly Medicare mistakes? Well, if you are a follower of Kiplinger, you should not be surprised in that they did pretty well. It is a very informative and helpful list. As I mentioned, they missed a couple of things, but nothing of real consequence, and it's quite probable that I've missed and will miss things too when it comes to Medicare. After all, there is a lot to Medicare, and it's always changing. I do hope that you have found this video helpful. If you have any questions about what I've just gone over, and when you are ready for my help in maximizing your healthcare and retirement insurance coverage and making a wise choice when it comes to all of your Medicare insurance options, and you live in one of the states that I'm licensed in, which you can see here, then please feel free to reach out to me either by phone or through one of my contact forms on my website. We will have an open and honest conversation about your healthcare needs and philosophies and budget. I will do my best to answer any questions or concerns that you may have, and once we determine what is best for your unique needs and budget, I will then enroll you in the plan or the plans of your choice, and of course, be available down the road for your support. To stay up to date and to gain more insight on maximizing your Medicare insurance, then please go ahead and subscribe. And who do you know who may benefit from this info? Please share it with them. I'm Chris Prying, the Medicare analyst. Make it a great day.